Hi everyone, you completed your first week of lectures, and in this week we covered financial statements and income tax. Just remember, financial statements, you need to know your definition and recognition criteria for assets, liabilities, income and expenses, and you need to know the general theory. In terms of income tax, you need to know your tax steps as well as the disclosure. And remember, practice. Especially make use of the Tuesdays that you have free and you have no class. And remember, get the book, write everything in one book, keep it all together. In this class, we'll just look at income tax specifically because we thought that a few of you may have struggled with the income tax question. So we'll look at case 1 together. Remember, it is examinable. 15 marks were examined in 2017 and 16 and then 10 in 2015. So this is 15% of your April mark. In terms of the tax steps, you will remember seeing this in lectures. You have 5 steps. Number 1 and number 2 is in your current year, and these are the provisional payments and the final tax calc. And then the last 3 are your SARS assessment, your under/over provision, and the settlement of your SARS account in the following year. The first 2 in your current year, and the last 3 in the following year. Let's look at the timeline. The first 2 take place in your current year, like we said. 2 payments take place on the 31st of August and the 28th of February. And the journal, as you'll recall, is debit SARS, credit bank. You're paying out cash, so bank decreases, debit SARS. Step 2, this usually takes place a month or 2 after year end. Once you've finalized all the journals, you'll calculate your final tax income, taking everything into account, and you'll post your second journal. This journal will be debit income tax expense, and this will go to the income statement, and credit SARS, because now we recognize that we owe SARS their income tax. And then the next 3 steps take place in the following year. The SARS assessment will be received. SARS will send you your final assessment saying you owe X amount. Then you need to compare what does SARS assessment say compared to what I've provided for. In step 2, we provided for our final income tax, and step 3 tells us what SARS gives us. Now, step 4 looks at the difference between the 2, which is your under or over provision. Again, you'll remember what your journal entry will be. It's debit income tax expense or credit SARS. This is in the case of an under provision. And then it would be debit SARS and credit income tax expense if it was an over provision. Lastly, we'll settle the account due to SARS. If we have an outstanding balance, we'll pay SARS, and the journal entry will be debit SARS, credit bank, again because we're paying SARS. If SARS owes us money, and the journal entry will be debit bank, credit SARS. So let's look at case 1 with some numbers. You'll remember these numbers. We made the 2 provisional payments. This was on 31st August and 28th February, the 2 amounts. Remember, in 31st August 2011, we estimated the taxable income for the whole year, so we need to remember to divide by 2. And then for 28th Feb 2012, you have the 82,143 times by 28%, which is the 13,000. You'll probably note that it's 28th Feb 2011, which is an error. It should be 2012. So follow your example. These numbers tie in exactly with your example, the dates as well. So that should be 28th Feb 2012. The journal entry, remember, debit SARS, credit bank. So your T accounts would look like this: SARS, bank. Your next step, final income tax calculation. We calculated in the scenario you'd have seen on the 31st of May, we got the final income tax amount and we times by 28%. So we think we'll owe SARS 30,000, and we'll post this journal entry: debit income tax expense, credit SARS. your T accounts will be updated as follows. In terms of the timeline, this is what your T accounts would look like as you go through the steps. You'll post your bank accounts and you'll post your income tax amount at the end of the year, in the new year, once you've calculated everything. Your disclosure will just be the 30,000. There won't be any under or over provision. Remember, the SARS assessment, under over provision all happen in the following year. So in our current year, we only recognize the current year tax expense of 30,000. Okay, in the following year, we follow steps 3, 4, and 5. Step 3, we receive SARS assessment and we've seen it as 28,000 per case 1. Did we under or over provide? It's quite clear that we over provided, right? So we expected to pay 30,000, but SARS said we only need to pay 28,000. Step 4, after we've received this assessment from SARS, we can now post the under or over provision. In this example, we over provided. So now we can reduce our income tax expense from 30,000 to 28,000. And we do this by the journal debit SARS, credit income tax expense. If we under provided, obviously this journal would have just been switched around to increase our income tax expense. In terms of case 1, we've now looked at step 1, 2, 3, and 4. But what about step 5? Currently your T accounts look like this, and you can see the bank calculation 1 is calculated to take into account step 5. The journal you'd process is debit SARS, credit bank to pay the remaining 5,000. We've paid 10,000, we've paid 13,000, and we've paid 5,000. So we've paid the full 28,000 which SARS said we should. Finally, your disclosure in the income tax will be, as per step 4, you'll adjust your income tax by 2,000 because this should be reduced. The 30,000 less the 2,000 should be your 28,000. Please note that in your 2012 year, your income tax expense on the current year line is 30,000. And only in the following year, once you receive SARS assessment, will it be adjusted. And that's done on the prior year line by putting the negative 2,000. Thanks guys, I hope you understand your income tax a bit better. Till next time.